All right, let's get into it. So, gonna be doing some back testing. Hopefully, you guys can hear the. Let me turn the desktop audio off. Actually, I'm not even gonna listen to music. Fuck it. So I'm just gonna do a bit of back testing first. Let me walk you through what the fuck I'm looking for. All right. So, here we go. On the higher time frame, there's some important concepts that you need to be delivering out of. There's fair value gaps, which you should know what those are. There's bullish, where you make an impulsive move and you leave a gap, and then there's bearish, where also an impulsive move and you leave a gap between the first and third candle. Bullish, bearish, and what you want to see happen is you want price to come in. Here's the fair value gap, and tap and respect it. And what I mean by respect is you want the wick to hit the fair value gap. Let's find like an example on the chart here. Let me go to MNQ. So what I mean by us respecting a fair value gap, like this impulsive move down made a fair value gap. What did we do? The wick came in and then the body closed out. That would mean we tapped into the gap and then moved away from it, respecting it. So then after respect, you usually want to see price continue down in that respected direction. And as you can see from that gap, that is what has happened. So fair value gaps are extremely effective on all time frames, but I like to use them mostly on the higher time frames. There's also something called swing highs and lows, aka liquidity. And what are those? It's basically, once again, a 3-candle pattern. But the thing with swing highs and swing lows is they are now the highest point of those 3 candles. So, for example, we have these 3 candles here. This is the highest point in the middle. You want the middle candle to be the highest point. So these are very outstanding on the chart. Like this is a swing high. This is a swing high. That's not a great one though. This is a swing high. This is a swing high. So why are these swing highs? Because the candles to the left and right of them are lower. Their highs are lower than the high in the middle. Just like this would be a swing low, because the candle on the left and the right of it, their lows are not as low. So it's the most outstanding high or low. So right here, swing high. Right here, swing low. So what happens is something called liquidity sweeps. And what that is we basically take out one of those swing highs or swing lows. And usually what happens there is we fake out people on different time frames, because people think, okay, we're probably going to now continue up. So if you get in a short position here, like let's say you get in a short position right here, where's your stop going to be? Above the high. So what does the market do? It's going to say, listen, we are bearish, but we want to take out all these resting orders above this high. So it'll come and sweep this high, coming up above that high, take those orders, and then go in the direction it actually wants to go. And the same thing happens with lows. Let's see if I can get a little. So right here, for example, let's say you're like, okay, we made this low. I now want to see price continue to go up. And I'll put my stop a little low. What happens? You get fucked, because you and so many other people have orders resting below this low, and the market wants to, before making an impulsive move up, it wants to come down and take out more orders. So that's what's called a liquidity sweep. There's liquidity underneath those lows and above those highs that we take out. So what do I want to see? I usually want to see on the higher time frames, and that's 15-minute, 30, 1 hour, 4 hour daily. I want to see a gap get respected and a lower high gets swept, and or a lower high gets swept. Usually the more important lower highs are going to be Asia low and high and London low and high. Asia, as you could see, I have this indicator. It's called ICT kill zones and pivots. Here it is right here. So Asia is from 8 p.m. over here to 12 a.m. And then London is from 2 a.m. over here to 5 a.m. We have the highs and lows taken out, and as you can see, typically price tends to draw to these lows or highs and then react off them in some certain way. So I want to see on the higher time frame liquidity sweeps and or fair value gaps getting respected in order to get 2 things. One, my bias for the day, what's going to happen for the entire session of New York AM. I only trade New York AM, 9:30 to 11 a.m. And also, what direction is my trade that I'm trying to get into going to be on? So that's going to be more like the 15-minute hourly, like what direction am I looking to get for the trade, because that's what I think we're going to do on the higher time frames or for the next little bit. And I'm trying to catch a big move, right? Now on the lower time frames, we have 2 things. And this is actually, let me do this first. SMT divergence is so money. This is literally the holy grail of trading. SMT divergence is when we have those swing highs and swing lows, And with NQ, we have a correlated asset. I only trade NQ, and that's ES, aka the S&P 500. These are correlated assets. And what that means is when one asset takes out a high or a low that the other one doesn't. So for example, you see the swing high right here. You see how NQ came and swept this high, but if you go over here to those same highs, ES never got up to that high right there. It's the same high, but NQ took it out and ES didn't, right? Let me just make sure my mic is working. Yeah, it is. Okay, so NQ took it out, but ES didn't. That is what's called an SMT. This works on highs and it works on lows. And what this signals almost always is a reversal. You put the stop above the SMT, and then you target obvious liquidity, maybe the slow, shit like that. So these shits work all the fucking time. And if you pair that with higher time frame confluences like fair value gaps or liquidity sweeps, and you get them on the lower and higher time frame, it's almost always going to be fucking money. So what is the final step now? You have the liquidity sweep and fair value gaps. You have the S&T divergence. What is the entry model? It's called an iFVG. You get the fair value gap, and then instead of respecting our fair value gap, this is only going to be on the lower time frame, by the way, 30 second, 1 minute, 2 minute, blah, blah, blah. You want to see a fair value gap now, instead of getting respected, inverse. And why this happens, for example, like today's trade by me, I believe it was right here. I think I caught like a 30 second or some bullshit. I just actually uploaded a trade recap, by the way. So what happens here? On my trade from today, which, you know, I already recapped this in a different video if you want to see this more, we open up this gap after making an SMT with this low. So I'm already bullish on the higher time frames. And then what do? We, instead of respecting this gap, tapping it, wicking it, body closing below on this bearish gap, we instead get a body close above, disrespecting the gap, which tells me that momentum is now shifted to bullish, and I think we're going to get a move up. And obviously we did because I'm goated. So let's go to the checklist. So this is kind of a mix of PB trading, Riley Balta, and then my own discretion. An A+ trade means you want to see a rejection out of a higher time frame for value gap. So you want to see a higher time frame like hourly, 4-hour, daily liquidity sweep or fair value gap get respected. You want to see an internal SMT, which, you know, on those lower time frames. So like if we took out this low on NQ but not on ES, you know, it's on the 30 second or the 1 minute. Anything basically before the 15-minute time frame would be an internal SMT. That would be your internal SMT. You want to see that. You want to see an external SMT. So like if we took out London low but didn't on NQ but didn't take it out on ES, that would be an external SMT because it's on the higher time frame, 15-minute and up. So for example, today's trade, my trade today had an external SMT. Why the fuck did it do that? And I took my trade right here because we had this low right here, which as you could see, we swept. But if you go over to ES, we were nowhere near sweeping it. So a fat external SMT was on the 15-minute time frame. So it's external, iFVG, which we just went through, and then your targets. You could target either opposite session highs, swing highs and lows, unfilled fair value gaps, meaning like fair value gaps on the 5-minute time frame and above that have not been respected or inversed yet, just completely untapped, unmitigated gaps, right? So for example, another short you could have taken, I believe, was that SMT here at these highs, an inverse stop above, and then we had not tapped into this 5-minute gap yet. You have a liquidity sweep, you have an SMT, you have an unfilled gap, you have an iFVG on the lower time frame. That's an example of a trade. So I'm going to do a quick back test here. We're going to see what we can find. Let's just do like, I don't know, fuck it, May 14th. So first things first on my back test, I'm only going to do like a couple trades because I'm tired. First things first is go on the higher time frames and get a bias. So what are we doing? So it's currently Wednesday and we've been fucking uptrending like fat as hell lately. We have these unfilled daily gaps above as possible draws. We're pushing through this high right here on the daily. Just call it 1 hour, fuck it. 4-hour wise, we are respecting this gap. So now I start to look, do we have an external SMT anywhere, right? Fuck. So it does seem like we have an external SMT with these highs. We took them out on NQ, but have not taken them out yet on ES. So that would be what I call a external SMT to the downside. We're bearish now. So did we take out London on this? No, we made equal lows. Okay, so right now on the 4-hour, we are bearish as fuck. But on the 1 hour, we are respecting this gap. We have, you know, new highs to go to. So right now it's kind of hard to form a correct bias, right? So let's just see what happens at open. I usually don't like to take a trade before 9:35. So we have this SMT, we have this liquidity sweep. So I might try to take a trade off this high right here. So as you can see, we make the external SMT, we sweep out this high, and now we got some potential gaps. So what I'd want to see is an inverse to the downside. Now, as you can see here, we ended up making a higher high here. So this is a very tough SMT to see. But we took out this candle high here, but didn't on ES. Super hard to see. I just get used to it. We didn't take it out on ES, but we did here on NQ. So sadly, I don't have the 30-second time frame because this was a bit ago. So I probably would have gotten in more like around here. Stop is always going to be above the SMT, and then you could go for a couple things. You could go for 1-to-1. You could go for a target if you're super confident. Like if you're like, okay, I think we're going to keep on displacing all the way down. But I usually like to take profits at just a 1-to-1. And yeah, so even if you want to be like, oh, that's bullshit, the 30-second wasn't there, well, the 1 minute was as well. So go fuck yourself. Let's say I did take the 1 minute. Let's say I did put the stop here. We catch the fucking move of the day anyway. So why do we do that? Simply put, let's break down the checklist, right? Rejection out of a higher time frame PD array. We swept out this 15-minute high, which actually might have even been, it was an hourly high too. So that's a higher time frame liquidity sweep. So that is rejection. What did we get? Internal SMT we did right here at these highs. External SMT with these highs over here, these 4-hour highs. iFVG, yes, on the 1 minute. And then targeting external liquidity. Yes, so what could we have targeted here as external liquidity, right? So we were trading inside this 15-minute gap. There was this unfilled 15-minute gap below. I like to go for 1-to-1s and then maybe leave a runner every once in a while. This unfilled 15-minute gap, the unmitigated, hasn't been respected or anything. We delivered to perfectly. And what do you know? Look what we react off of. So our target was absolutely perfect. You catch 2.1 RR if you went for the unfilled 15, or you could just get your 1-to-1 and be happy and leave. That is an A+ setup. If you go on my Discord, as you can see, all of my trades look the exact same. So let's go to like, I haven't lost in a bit actually. I've been doing pretty well lately. So this is my first L. Oh, this was, yeah, so this was November 13th and it's December 1st. So I've been on a very solid win streak lately. And this trade, deadass, just fucking sucked. Like, I don't know why I took this trade at all. This is a bad trade by me. Like, just mental L, TBH. So as you can see, like, we've been doing pretty well. Break even, win. We've been very, very successful lately. Win. Yeah, so my shit works, if you're wondering. I made fucking $10,000 today. So, yeah. See, actually, if I have some proof of that, just to show you guys I'm not bullshitting. Here's my shit. December 1st at 10 a.m. I was done by 9:46 today. 13 accounts. 10K profit. JJ Futures official with the fucking Alan from Smiling Friends profile picture. My funded futures did well. I have 5 my funded futures, 3 alpha futures, 5 top steps, and oh yeah, that's it. Yeah, I'm adding some lucid soon. I'm probably gonna gamble them on an NFP. But if you look, all of my trades look the same, right? This blue box here is a fair value gap. We have an SMT. We have an inverse. We have highs above. I go 1-to-1, right? Oh my God, it's almost like, let's see here. External SMT with this high, internal SMT with this 930 high. Gap gets inversed. Low here is a target. Oh my God, it's fucking beautiful. It literally works every time. Let's go here. This was a break even, but it still is valid. We tap into this blue box, which is a gap. We get an internal SMT. We get an inverse. What the fuck was going on here today? Jesus Christ. We have these highs. We go, or these lows stacked. We go here as break even. What do you know? We get break even. That obviously just a shitty day. And then today, same exact thing. External SMT, inverse, delivering out of a gap. It was a daily gap. Break even point, 1-to-1. Beautiful. All you need, man. All you fucking need. I went 1-to-1 today, yet I made 10K. How do I do that? 'Cause small wins add up over time, right? So, yeah. So, honestly, I'm not trying to do like a whole back testing session. I'm just trying to break down to you guys what my strategy is. I post trade recaps in my Discord for free. I go live, like today's trade was live, as you could see. But live. Where the fuck is my shit, actually? What the fuck? Did I just not message? Bang, done in 15 minutes. Live now, 9:30. I was live for free entirely. This is the general chat. Journal every single day. Post trade recaps on Instagram at JJ Futures Official. And I offer one-on-one mentorship. Obviously, like, I'm going to charge you for one-on-one mentorship because that's my actual valuable time. So, like, fuck you. A lot of people get mad at me for that shit. It's like, gang, I'm not going to... Why does the indicator stop working here? Like, gang, I'm not going to fucking talk to you for 30 minutes for free, all right? Sorry. So, yeah, so, you know, we have premium Discord. We have free, but, you know, you can learn all my shit off YouTube. It's just more of, like, the psychology and risk management guidance that you get from premium. But overall, like, I give out so much fucking sauce on this YouTube channel. Like, this model is absolutely A+ and money, and I've been banking with it. Made 10K today. Have 13 PA accounts. Goal is to get them all to a buffer. I'm not trying to take any payouts in December just because of taxes. So I'm trying to build up buffers and then take out 40 in January or some shit like that. We'll see. We'll see. If I could do 50K in January, I'd be very happy. So yeah, that is my system. That's my system. That's how I win consistently in the markets. Knock on fucking wood. I mean, maybe I'll lose tomorrow. I won't really give a fuck. I'm still up a lot, but I haven't lost since November 13th, and that was just a bad quality trade. So it's really more like since the beginning of November. So yeah, should be a good December. I'm live premium like 2 or 3 times a week. I'm live for free 1 to 2 times a week. I'm always here to talk on Instagram or Discord about my setup. Any questions you have, just hit me up and we can bank together. So yeah, but that is what I look for in my strategy with a live example. Check out the trade recap from today and I'll catch you later.